guys, welcome back to our YouTube channel Victory Education. This is part 2 of the chapter Introduction to Accounting. In case you didn't watch part 1, I have linked in the description. Make sure you watch it. So let's begin with today's video. So in today's video, we're going to study the qualitative characteristics of accounting informations. So the question arises here is that why do we study these qualitative characteristics? Because in order to assess whether accounting information is decision useful or not, it must possess the characteristics such as reliability, relevance, understandability, and comparability. So let us understand these characteristics in detail. Okay, so first one is reliability. So what is reliability? Reliability is nothing but the users must be able to depend on the information. Okay, so the decision makers of the company must depend on the financial information for making decision. Okay, so the information should be free from bias and error. Obviously, a reliable information should be free from any error and bias and faithfully represents what is meant to represent. Okay, the information should be credible, that must be verifiable by independent parties like chartered accountants, and be neutral and faithful, because if it is verified, neutral and faithful, then only it becomes credible, that trustfulness of that in particular information, and from that information the company is going to make decisions for the sake of company. Next is relevance. What is relevance? Relevance means the accounting information should be present in the right time, because it must be timely. It must be available to the decision makers before it loses its capacity to appropriately inform decisions, because sometimes there is a problem, and in that problem we're gonna provide the information timely. If in that particular situation the information is not provided at right time, then the information is not so useful. Okay, so the next point here is prediction and feedback. Okay, so the relevance of the information means if the information is provided at right time, we can predict the future happenings or the future cash flows. We can predict it and we can give feedback to them. Okay, and correcting past evaluations. So if the company has made any wrong interpretations in the past, so it can correct the past evaluations by getting the relevant information. So next is understandability. Okay, understandability means decision makers must interpret accounting information in the same sense as it is prepared and conveyed to them. Okay, the accountant should present the information in the most intelligible manner without sacrificing reliability and relevance. Okay, so the next is comparability. So the comparability means financial reports are able to compare. Okay, it is not sufficient that the financial information is relevant or reliable at a particular time, but it is equally important that the users are able to compare the various aspects of an entity over different time period and with other entities. So for that comparability, the accounting reports must be of common period and of common unit of measurement. So the next is objectives of accounting. Okay, so the first objective is to maintain full and systematic records of business transactions, because we all know that accounting is the language of business transactions, and even the most brilliant executive or manager cannot accurately remember the numerous amount of varied transactions such as purchase, sale, receipt, payment, etc. that take place in the business every day. So that's why a proper and complete record of the systematic record of business transaction is required, and the required information enables verifiability and acts as an evidence. Okay, the next is to ascertain profit and loss of the business. Okay, the owners of business are keen to have an idea about the net results of their business operations, whether they have made a business, whether their business has earned profits or incurred losses. So we have to ascertain profit and loss of a business. So by preparing profit and loss account. So how do we prepare the profit and loss? So by preparing profit and loss account. So here is an example of that. Suppose a business has earned profit revenue of 6 lakh rupees and the expenses of a business are 5 lakh 40,000 rupees. So the difference of this profit is nothing but revenue minus expenses. So 6 lakh minus 5 lakh 40,000 will be 60,000. So 60,000 is the profit of a company. Okay. So next is to depict financial position of a company. So just as a doctor will feel the pulse of his patient and know whether he is enjoying good health or not, in the same way, by looking at the balance sheet, the company will come to know that whether it is financially healthy or not. Next is to provide accounting information to the interested users. So in the previous video, I have told that who are interested users and what are the types of interested users. If you didn't watch, then please do watch it. Interested users are, so who are the one who need the information of a company and why they need that. So let's understand. The first one here is investors and potential investors. So they need the information because on the risk and return on investment, because they are the one who will be investing on the company, and they need information to assess whether the company is making enough profits or not. So the next one is unions and employee groups, because they want information on the stability, profitability and a distribution of wealth within the business, because they want salary, wages for their livelihood. From that information, they are going to need information. So the next one is lenders and financial institutions. Why they need information? Obviously on the credit worthiness, of a company and it's their ability to repay loans and pay interests. Next is the customers. So why do customers need information? Because they want the profitability of the continuous supply of products, parts and after the sales services. So that's why they need the information. The next is government and other regulatories. Why they need information? Because on the allocation of resources and compliance of the regulations, because we know the tax authorities that comes in government authorities, they need information because to collect the taxes on VAT, GST and all. So the next is social responsibility groups. So why they need information? They need information because whether the company is environment friendly or not. If the company's any activities is affecting the social or the societal environment, then it will be danger for them. So that's why they need the information. So next is competitors. So why they need information? Because to understand the strengths and weaknesses of their competitors and compare and for benchmarking purposes. Okay, so that's it for today's video. We covered in today's video, that is qualitative characteristics of accounting information, then we have covered objectives of accounting, and then we have covered the information of the various interested users and why they need the information of a particular company. So I hope you guys understood today's video, and if you like our videos, then please do subscribe and hit the bell icon to see our videos first. Thank you.